Yeah. Excellent. Listen, investor panel is something I always like. It's I think investors are what makes this space work, right? Without investors, we wouldn't have DePIN anywhere. So we've assembled here some very specialized, focused DePIN investors, and it's DevCon, and because it's DevCon, that means we have Chad, because Chad also joined us in Bangkok at DevCon, and we also have Vinny, who also joined us in DevCon in Bangkok. And meanwhile, we have two, I think, first-time panelists, right? We have Reagan and we have Parker, both first-time panelists. So thrilled to have this group here. I think we'll start off with quick intros. So why don't each of you guys introduce yourselves? And I think when you do that, name a couple, of the DePIN projects in which you're invested. Obviously, Lattice, if you gave every DePIN project you invested in, we'd be here for a little while. So
I don't remember all of them. So
yeah, exactly. So it's just a couple DePIN projects in which you're invested, so it helps sort of set the stage.
Yeah, my name is Regan. I'm one of the co-founders of a crypto venture fund called Lattice. Our focus is very broad within digital assets, but DePIN has been a big focus. And we've seeded a handful of companies in the space, from Demo to Glow to Daylight to Nosh, kind of across the spectrum of DePIN networks.
Hi, I'm Vinny. I research and I invest in a fund called EV3. We've also been pretty fortunate, I think, to partner with a lot of the DePIN projects, both here and not here. Like, as he mentioned, Nosh, Daylight, but also we were early into Glow, Andrina, Dawn, and a few others as well.
I'm Chad. I'm GP and CTO at Blue Yard Capital. We've been doing crypto investments since 2016. Our first investment was Filecoin. So there's a DePIN one, Demo, Recall, a few others.
I'm Parker. I'm a principal at Framework Ventures. We backed Glow pretty early, DayFi, which is the new financing product, through Daylight. And then we also did Star Power as well, which is focused on batteries in Asia. So.
Terrific. Well, great to have you guys all here. I think you start off with a general question, then we're going to get into some more specifics. But what makes DePIN challenging and also attractive? Like, it's attractive for investors, but also is certainly, and we've seen in the market right now, it's challenging. So maybe kind of get into kind of how you sort of see the space and attack it from an investment perspective, the opportunities and kind of the risks.
Yeah, I think most DePIN networks require some sort of enterprise buy-in, right? Like, as an example, your Glow, you need people that operate solar farms at scale to want to engage with the network. And until the US regulatory kind of view on crypto had shifted over the last 6 months, I think that was very hard to drive. I also think DePIN tokens often had cash flows before most other tokens, which ironically I think was a hindrance, because whatever, you're making $100,000 a month or a pretty small amount of money early on in a network, you almost are probably better off making zero. Just in the
no revenue, pre-revenue, be pre-revenue.
Yeah, and I find that that meme is actually often quite true. But I think that's shifting, where this fundamentals season, which sounds so ridiculous saying, but I think more broadly people have kind of woken up to cash flow generating assets, and fortunately a lot of DePIN tokens, GeoNet, Helium, a bunch of them are actually throwing off cash flows, and so I think the market is kind of waking up to this asset class.
So to not repeat everything that he just said, I'll try to add a bit there too. One of the exciting things about DePIN, but also inherently the challenge that you have, is you're also dealing with physical hardware a lot of the time, right? And so you have to now build the hardware, it breaks, people need to know how to be able to fix it. That has to be actually easy for deployers to do. Kudos to the WeatherXM team for sort of their device that's very modular, but also I would say it's easier to deploy compared to maybe a traditional weather station. So you have these challenges, but the benefit is you're able to significantly reduce your OpEx and your CapEx, and you're able to allow individuals to help manage these larger networks. And we hosted a conference in Africa this year, actually, and in the US you can say that this improves, let's say, your margins by 30-40%, and you can deliver a better product. In certain parts of the world, this actually makes use cases entirely possible that otherwise weren't. And so it's really exciting to see what individuals are able to do with greater access to technology as well.
I hope we're not going to go down the row every time, but I'm going to keep doing it right now. Totally what Regan said about you need enterprise buy-in, it's you need actual customers, that you need demand for things. So weird in crypto, right? And I mean that tongue in cheek. Like, that's also a good thing. It's a bad thing and a good thing, right? The bad part is, like, we can't just build crap and pump it, and people will start looking at the actual fundamentals. And when there are fundamentals, then they will challenge them. The other thing to me that's attractive is, like, DePIN is a thing where something actually happens. In crypto, there are like 3 categories of things. There's the infrastructure of crypto itself, the blockchain, the internal stuff that makes it go fast. Those are projects you can fund. There's DeFi, which is all the finance stuff. And then there's literally everything else, which we call DePIN, but we could call it something like token coordinated off-chain systems or something like that. You're coordinating resources with tokens in adversarial environments, scarce resources. That's exciting because you're actually impacting the real world. It's also difficult for me as a nerd. The problem is I see a bunch of DePIN projects and I'm like, oh, I love this and I love this and I love this, and no one will buy it because it's like idealism and cypherpunkism, and I have to separate my investor brain from the nerd that's been doing open source forever. That's really hard for me.
Yeah, to kind of build off that, I think it's cool how a lot of these DePIN projects, there is real world impact, and I also think that carries over on the economic side as well. At Framework, not only did we go and back low, we also went and doubled down and built a 20 megawatt solar farm in India with these guys, 35,000 solar panels in Rajasthan. I had the opportunity to go out with the Glow team and actually go see the impact there. And I can't point to another project in crypto where, quite frankly, you walk into a place and just think to yourself, like, wow, this really happened because of what exists on chain. I think we're seeing that with Daylight as well. They're doing virtual power plants now, I think in 8 different states. Just launched a financing product to go complement that. We just led their round, I think a month and a half ago. And I think the challenges here really come down to logistics more than on-chain coordination. A lot of times you're having to work with people that are across the world. But I do think that crypto is best used for incentive alignment, and I think that we've seen that across the space.
Listen, I think you touched on that raise. I think that's worth mentioning, and I probably should have mentioned in my intro. For those that aren't familiar with it, Daylight, or rather Framework, led a round in Daylight that was $75 million, and I think that's got to be the biggest DePIN round in as long as I can remember. I mean, there have been bigger ones, but that was multiple cycles ago, right? So I think that's got to be the biggest DePIN raise in quite a while. So and to go into that, maybe talk, and then we'll go this way, Chad, to make you happy. But what are you? What do you look for in a DePIN project and a DePIN founder, and what does it take to get the conviction to put a $75 million round into a DePIN company?
That's a really good question. I think the first thing that we're looking at is, quite frankly, I underwrite a DePIN project as a Web 2 company first that is enabled on-chain. I think with Daylight, I ran an energy company previous to joining Framework. Did that for 2 years, energy fintech company. And when I met with Jason back in, I think it was January, we started jamming on what it would look like if they launched a energy finance product, and quite frankly, that really resonated with us. It also aligned with our investment thesis. We're super early in DeFi. Fund started, back in 2018, and I think there is like the perfect marriage in that investment between real-world physical infrastructure and what is happening in finance. And I think we can carry that theme across, a variety of different investments. We're obviously very excited about what Daylight is doing.
We're really going to me. Okay, cool. I think you have to find a passionate founder who has domain expertise, who has unfair advantages in the industry, ideally, and can drive demand, because it's really easy to create supply. That's the constant topic of conversation on these panels, and very hard to create demand for most of these DePIN projects, or maybe crypto projects in general. So you have someone who's in the industry, sees a hole, fixes it, they know they can sell it. That's sort of the big thing. If I find that, I'm excited. And then I also want someone who cares about the ideological piece of it. We do want to decentralize, we do want to democratize. It's not that I'm just a greedy VC, but since my job is to make money, I have to think about that as well.
What's interesting, before you get in, is that sales is kind of what you mentioned, right? And so that gets into the real world issue of DePIN that actually has to sell, and that creates challenges.
Right, because a lot of the things we build are just like, well, let's do a decentralized version of this thing or that thing. No one's asking for that, you know. You have to actually build things people want.
I'll point to two things, actually. So to double down on something that Parker said, I mean, these companies have usually very traditional Web 2 counterparts. And so to use, outside of the daylight example, I think Jason's an absolute killer, and he also has a ton of industry knowledge before that. But to look at something like, decentralized ISPs, right? Like we all have internet that we have to set up at our home. And if your process involves having a wallet and buying tokens and, trying to plug box, like it becomes much more challenging. Everybody has a comp. They know how easy it is to plug in a Spectrum box or Verizon box. And so when you think about the protocol that's being built, you have to have somebody who understands, incentive structures quite well, but also they need to build a product experience that like my mother can use or my father can use, right, without needing to call me up. And that becomes very, very important. And then to double down on something that I think Chad kind of alluded to, is it's very easy to create this like theoretical framework of decentralization. But oftentimes when you want to build these businesses, you're going to have certain points where you will have centralization, right? Whether it's, you need to be able to audit and underwrite somewhat of how a solar farm operates, or whether it's, you need to be able to measure the actual energy usage, right? Like you will have these points. And so creating a protocol that is practical is, in my opinion, much, much more important than creating a protocol that is like theoretically cypherpunk. Because at the end of the day, the protocol has to work. And it's oftentimes a challenge, I think, when you actually get into the weeds with the founders.
The only thing I'll add, I think, is something that we try to underwrite is how easy it is for like not just someone to use the product, but like for someone to be the supply side of these DePIN networks. I think we're moving towards a world where people value tokens through cash flows. I think that's probably not where we are today. And so our view is like assets like GeoNet that actually have pretty meaningful cash flows. I think the market has tended to undervalue because to set up a GNSS sensor, I mean, one, you have to like fucking Google it and like, learn what GNSS is. It's also like a few $1,000s. We have a portfolio company called Grass, and they basically allows anyone to contribute their unused internet bandwidth to AI companies to like train LLM models on. And it is as simple as like installing a browser extension. And they have millions of monthly active users. They have like 10 figures in revenue. It's not all on chain yet, and so I think people kind of like underestimate how far ahead they are commercially in the market. But our view is like, just as an example, is like that has been especially successful because in order to like get involved, it is a very passive thing that is purely software. It's very easy to do. And so we tend to get excited about businesses that have a component like that.
Yeah, I think, I talk to multi-coin guys, they view as active or passive DePINs, and active meaning you actually have to do something to provide that service versus passive. It's an extension that just runs behind, or you install something and just exists and runs by itself. And they see that distinction as well, I would say. The flip side of this is what are pitfalls or mistakes you've seen either yourselves make in investing in DePIN projects or founders in DePIN projects make? Who wants to take that one first? Vinny wants to go.
Okay. We both were on.
Good,
Yeah, we're breaking the order here.
Mm-hmm.
Well, I think there's two. So one is the UX side of things, right? If I need to understand what a wallet is, I have to go buy specific tokens. I have to be able to spend those tokens in order to interact with your product. Unless I really care, I'm probably not going to, right? And so I think we're starting to see a lot more teams that have realized that, okay, maybe the day where each user manages their own wallet is going to be entirely abstracted away. And I think that becomes hugely important. And then one thing I really love to bring up, because I think it was actually a really brilliant structure, was like Helium's tokenomic design. So then, I mean, the previous one. I mean, they had this idea for, okay, we're going to be able to not just have our Internet of Things network, but we're going to be able to launch a mobile network. Maybe we'll do some sort of energy network. And they had this really elegant system by which all these sub-tokens would interact with each other. It ended up creating this implicit hedging market, and it confused the living daylights out of everybody. So retail investors to even institutional investors would sit there and look at it, and they would try to go through all these HIPs, the Helium improvement proposals. They tried to piece it together, and in reality, you ended up getting this very confused market that had no idea what token would accrue what value, and a tweet would send prices going haywire. And so sometimes you want something that is incredibly simple because it's going to be unbelievably valuable for not just retail, but also investors to be able to understand, especially as you deploy, even if you could create something that's 5 times more complex and makes the nerd in me really excited because it's elegant. And so I think we're starting to see a shift also towards simplicity, both in UX, but also in incentive design and tokenomic design and more.
I want to talk about a mistake that we have made.
You guys haven't made mistakes. What are we talking
Lots of mistakes, yeah. And one of them, I mean, we don't know it's a mistake yet. It feels like it. When we talk to Glow, to your point about, someone's point about manual stuff and like the humans in the world, we were underwhelmed by the auditing process. And especially me, like, oh, surely it should be automated and you don't need like an intern to go do it. That's what we heard. Now I think, okay, of course, that's what you have to do. You have to reach into the real world. Hopefully there's some token incentivized thing where you're coordinating these scarce resources that are humans. And that's a DePIN network too of humans, you know. But that's the thing. To Vinny's point, yeah, nobody needs to be messing with crypto wallets. We need them, but you know, I think like passkeys, the industry is going to catch up somehow, and there's going to be something where it's possible to create one without knowing what you're doing. But obviously, we should not be messing with crypto wallets with consumers.
I just want to say shout out to Glow. Yeah, I do think that you not investing in them was a mistake.
Thank you.
And by the way, if everyone wants to hear, David is following, Vorik from Glow follows this panel, so you'll be able to hear from him directly. Let's move to sectors. Are there sectors that you're particularly interested or looking in DePIN projects now? Obviously, I guess we have to leave energy out of that. I mean, we just sort of covered that. Are there other sectors, I should say, besides energy? Anything you're looking at, Reagan?
Yeah, I think we think data is really exciting. I mean, people have been talking about this idea of like data DAOs for years, and I think generally have like actually lost a lot of money like chasing this this vision. But you know, I think you talk to people who are like deeper in AI research, and much of the world's data has like already been trained on, right? And so the question kind of now is like, well, like if you move beyond public data, what types of private data sets are really valuable? And it kind of seems like the next frontier, right? You have like health data that is generally like definitionally private, and there is like a massive amount of data there that's simply like, you are OpenAI or whatever, you can't just like access people's health records. We think that's also true of personal finance, and there's many, many other categories. Those two are probably the largest. And so, you know, our view is that companies that are able to use token incentives to bootstrap marketplaces where people share that data, we're really excited about. We're investors in a company called Pulse. They make a wearable, kind of like a Whoop or an Oura Ring, and essentially you can earn equity in the network in the form of tokens through contributing your health data, and then they kind of like repackage that and monetize it in aggregate. And we think people will make businesses like that in kind of many other niches of health and finance data work. So I'd say data broadly, we're very excited about.
Just don't call it equity.
Yeah, anything
You're
goes.
blow
Anything goes now. You
Yeah,
haven't heard. You haven't heard. Yeah.
I suppose you're right.
I think we look at a lot of you know, this like DePIN DeFi intersection at the moment. I think there's a ton of DeFi projects that obviously have a lot of real world impact, but I think the reverse is becoming even more true, where a lot of DePIN is being derived by financial infrastructure that's being built on chain. Really interesting company. They're not a portfolio company. It's called Share. They're doing internet across Africa right now. They, I believe, are about to go launch their product, which they just announced a couple weeks ago. But they're doing a really interesting, you know, coordination layer around, you know, how do we actually give internet to people who don't have it? But then there's the financing aspect of how do we use stablecoins to go coordinate the financing layer as well. And I think there's going to be a lot of really interesting examples outside of energy that that are announced here in the next couple months.
I don't think in terms of DePIN or not DePIN, but I would say on the data point, the interesting thing there that makes the world different, other than like LLMs and training and all this crap, is everything that everyone who's tried to do this in the past has done it in an environment where you can't safely put private data somewhere in public. So it's been sort of either a no-go or some sort of thing where you're like, okay, we're just going to extract personal data from people who need the money, and it's going to recreate the problems of the past in a way that at a level we've never seen before. Now we've got great technologies that have matured over the last few years. You know, Fluence is building some of this stuff, and like various ZK stuff, TEs, a bunch of mainstreaming stuff coming into reality where you can do this and you can do it without royally screwing the people who provide this private data. So I'm bullish on the data stuff now, but I was really skeptical like 2 or 3 years ago when I started hearing about it.
What you'll hit the next question because you're one of the funds that has it. What about liquid tokens? Right, so especially we are in the market right now, you can buy into projects cheaper than previous private rounds, right? So there's the opportunity to do that. I know you guys, EV3 has a liquid fund. Do other guys have other funds have the ability and mandate to buy liquid tokens? And if so, how do you look at those investments and have you made any and what's your perspective on it? You get to kick off any.
Gee, thanks. No, I mean, I can't talk about active positions in a fund, but I can say that, I think that the market has yet to catch up with the value of a lot of these networks. And the things that are being done, even if aren't being reflected in the token value right now by a lot of the projects that we've not only mentioned on stage, but also, if you look at Helium, for example, right? I mean, they had a pretty tough initial go, even though their market pricing might have reflected something different. But if you look now, they not only have the free data plan, but also they have nodes in major cities. You can get a Helium plan. People are using it, even as something as simple as I live in New York. I'll get on the subway, and there's some subways where they have an entire ad that people you see them engaging with it, right? Scanning the QR code, saying, "Wow, I can spend $10, $15, $20 a month and get a comparable phone plan." And so, I look at it as the market has yet to catch up with the work being done, and there's a lot of really good work being done to build out these networks and to not just validate what's happening, but to pour gasoline on the fire. And I think the phrase slowly, 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 and then all at once really applies here, because when the market does catch up, I think valuations are gonna re-rate pretty heavily across the entire DePIN space, at least with the teams that are building out real infrastructure, which I think there is quite a few. So I definitely personally am very bullish. It's not investment advice and not a reflection on our fund's holdings, but I personally am quite bullish on a lot of the DePIN projects in the medium to longer term. I think in the short term, it's tough, right? I mean, the market can be irrational for a long time, and I think to Reagan's point, as the market starts to price in real revenues, real networks, real hardware on the ground, I think we're going to start to see DePIN get a lot more attention. So I'm excited for the next 12 to 18 months.
Yeah, look at Helium's price versus its KPIs. It's this bizarre X pattern where the KPIs are all going up in the right direction, the price is going down. I think we all hope it's true that we will start being rational, because at least all these people I know are rational people. I don't know. I really
Chad,
do.
Do you guys buy? Do you have a mandate to buy liquid tokens?
We do. Yeah, and the way we do it, I mean, we
like.
meet the teams and we think of it almost like an equity investment. Get to know them, really understand.
So it's not a trading; it's a similar underwriting process as if it were a venture investment.
Yeah, buy and hold. That's the way we think about it. Yeah, and I hope, because like I said, this is the stuff that's meaningful. Not all of it, obviously, but a lot of it is. And there are revenues and there's business. Like, let's actually reward that. So this might be the time to buy it all. I don't know.
I would argue that it's better to go participate in the actual networks themselves than buy liquid tokens oftentimes. If you go look at Glow, post their V2 launch, I mean, they're literally selling solar farms out in minutes at the moment. I think investors are starting to realize that the best way to get access to these types of projects is to actually go participate in them. And I think that's probably our perspective going forward.
Is to actually not buy the liquid tokens, but participate in being a provider.
Exactly.
Gotcha. Interesting. You reduce and use the rewards as your liquid token kind of pool, more or less.
Yeah, I mean, we obviously, when we were underwriting that solar farm in India, for example, we're thinking about, one, how can we go bootstrap a protocol and get some traction there? And then second, it's like, look, the on-chain rewards that are earned from participating in these networks, you actually sometimes get tokens at a discount by participating in these networks. And ultimately, I think it's just healthier for the ecosystem for people to go participate rather than just go buy liquid tokens.
Well, as someone who has a token, I just want people to buy it. Reagan, anything?
No, I mean, I think what we're seeing is kind of this vestige of like, you know, a lot of tokens suck, right? There were a lot of like real reasons why things like cash flows and governance had to be like divorced from the actual asset. And I think we're starting to see pure assets like Hyperliquid, where it's like, okay, the protocol makes money, you see it on chain, and it goes to tokens, right? And I think we're still dealing with the hangover from a lot of the financial wonkiness before. Like Helium, as an interesting example, right? They had a corporate entity, they had the protocol, and oftentimes the corporate entity would make money. That's not going to token holders. That's certainly not viewable on chain. And them, and I think a lot of these other DePIN networks, now that there is kind of like a better regulatory environment, are making real strides to like converging all of the economics of any of these businesses into a single entity that passes back to token holders. So I think that that is going in the right direction, but at the same time, like you're a DePIN network and you've given out, you know, I don't know, 30% of the supply to like miners, right? Like there's only so many things you can do. So we're excited about the future, but I think a lot of these like kind of V1 DePIN tokens, hopefully we'll learn, you know, we'll learn from some mistakes.
Well, listen, plenty have. Helium has readjusted back
100,
its token
100%.
economics and can do more. Others have also, I mean, there have been even attempts at Filecoin and others to change token economics, but that's actually the last question, is token economics, and how much do you focus on that in the initial investment? How much do you focus, or is that something that comes later and is part of the discussion when projects are more mature? Or Chad, when you sit down with the founders, is that a make or break depending on where the token economics kind of are?
I think it's pretty much make or break. I mean, it depends on the phase, you know, but especially the later phase ones, if we're talking about liquid, then obviously it is. But yeah, they have to at least have thought through it, and it has to make sense to us.
Any other thoughts on that?
I mean, I agree, especially like for liquid tokens or later stage, you want people to have a great grasp of like where value is accruing, right? These are coordination mechanisms, they're incentive structures, and you want to have a pretty good idea on how value accrues and what part of that accrues to the token. I also think though, for a pre-seed investment, we majority of our bread and butter is pre-seed and seed, so we're trying to meet founders very, very early. I think that that's something that the right partners will help a founder with, and so it's not necessarily that a founder has to have, especially if they have deep industry expertise and they're maybe a little less familiar with the Web3 nature of things. It's not that they have to have every single question thought out. But if you meet a founder who is like, oh, I heard about this crypto thing, I think I can do a good job, and they know a little bit and just enough to be dangerous, and they come in, clearly they haven't spent the time thinking about it. And we want to partner with teams that are here for 10, 15-year durations, right, to build really sustainable businesses. And so it's more about how thoughtful have you been. It's not, can you answer every single question at the earliest stage?
Last question. Next year, DevCon panel. We're sitting here, all right? So the question is, which DePIN investment has surprised the most on the upside? And that can be either by metrics or by market. You can I'll give you the out to figure out one of either of those ways, which has executed the best or the market has appreciated the most in this next year.
I'll say
each of you have to give me one. It doesn't have to be.
I'll be thrown under the bus. I'll say one. We talked a lot about, I think, some really great operators. I'll say one that's still early stage that we're really excited to partner with. I think SkyMapper is actually going to. I threw you a curveball.
Right, love
Nobody
it.
saw that one
Great.
coming. I think they're actually going to surprise. I think just given the sheer increase in drone activity and kind of already a lot of the hardware that exists and some of their ability is not just blockchain builders, but actually as operators. I mean, Frank has 30 years of experience coming from SETI. I think that the slew of products and updates they have over the next 12 months, I think are going to be really exciting.
Okay.
So I'm excited to see their
Anyone
progress.
else have something they want to share that's going to surprise the upside over the next year? Regan?
We always view Bitcoin as the original.
Oh, it's not DePIN. Come on.
I mean,
Then everything's DePIN.
Will, I think here you're coordinating. I mean, fair enough. I think more than proof of stake networks, arguably, it's like a DePIN. That's probably a lame answer, but I mean, we were.
That doesn't
Let
count.
me think for like 20 seconds.
Coordinating governments with Bitcoin, right? There you go.
Yeah.
Anything, Parker, before we wrap it up?
I mean, I would point to Daylight at the moment.
Okay.
I think what they're doing on the financing coordination layers across energy is incredibly impressive. I also think that they're, quite frankly, just redefining how energy is going to be distributed, specifically with how they're doing coordination across virtual power plants. And I think homeowners are going to be incentivized in a totally different way that they've never been before. Just like looking at the previous company that I was building, that product would have changed our distribution model. And I think we're going to see adoption there in a pretty big way.
Well, that's a great way to wrap it up, because the person who's coming next is going to talk about why they are going to surprise most next year. So give a round of applause to this panel, please. Thank you. Thank you, guys.